Hello, my friends. My name is Adam Kahn, and welcome to my Dividend Retirement Journey. Today, I'm going to go over three stocks that I'm looking at that pay nice dividends that I'm looking to rotate into or add on to in my set it and forget it account for my goal to use these dividends to pay bills and help me through my retirement days. Now, before I even get into the three stocks, let's talk about the reason that I've begun doing this. As I've been getting older, this year I turned 54 years old, I think more and more about retirement, what my objective is, and what I want to be at and how I want things to work out. And the reality is, I don't want to pay such close attention that I worry about selling a few shares here or there or continuing to do covered calls, which I already do, and I'm happy to go into that as well. But I'd rather just have dividends coming in to help to pay the bills. And then the other thought is, as sick and twisted as this is, if anything happens to me and I pass away, it's an easier transition for my wife and kid where they really don't have to do a whole lot other than be comfortable with the stocks that I put ourselves into and see if they're okay with the income coming in. Otherwise, they have to kind of get involved a bit, learn about the markets and everything else that I don't think they're super interested in doing. So I feel like if I set things up with dividends, have them automatically sent into our checking account, it's much easier for them to be able to quantify, or at least for my wife, assuming that that's who's dealing with this in time, to be able to quantify how much money comes in, budget appropriately, and live her life comfortably without worrying too much about what's going on, trying to figure out investment strategies and start learning things that she doesn't have a whole lot of interest in. The other thing is, I feel like these stocks have been out of favor for so long now. I mean, we're talking about years, while we've watched the tech stocks continue to go higher and higher. I think that the rotation that we're seeing right now has a lot of valid reasons to it, and I think the smart money is trying to get ahead of the curve. And what I mean by that is, we're in an environment, even CPI came in a little bit lower than expected on Thursday or Friday, where things might be slowing down. So, what do I expect to happen with dividend stocks, and why do I think that might happen? I think you're going to see the prices of the dividend stocks go higher as long as those dividends are safe and as long as they're able to make those payments. Because what I envision is while people's CDs that they were able to get at maybe 4%, possibly even 5% yields not that long ago, as those mature and start to expire and they look at an environment that has lower returning yields, they're going to want to find something that pays a better yield. I think the smart money already sees that. So they're getting into the companies that they think are well established that can pay those dividends pretty easily. Because as that money rotates out of CDs, and potentially you'll even see the high yield savings accounts start to lower them, especially in a competitive environment. When one starts to do it, the next will do it, and maybe they'll stay a little bit higher than somebody else, but they're all going to be in a position that they're going to need to lower those returns. As that money starts coming out of those CDs and people are disappointed with what the new CDs are offering, they're going to start asking their advisors about what other options are there out there. And the first thing that's going to come to mind are dividend stocks. Why? Because they're a little bit more safe than the tech companies and they're still giving people the same type of return. They do have more risk, obviously, than a CD because the price of the stock can go up or down. But to the people investing in them that feel like those dividends are secure, they're much more likely to start looking elsewhere, going into companies like Verizon, which will be one of the ones I talk about, or things that are giving them a better yield than they were getting in their CDs. I do think that's why we're seeing that money begin to flow into that stuff out of the tech side. And I think that'll continue for some time, so long as the data is showing a slowdown. And as we transform and change who the Fed chairman is to somebody who's going to be more willing to cut rates, and I don't think Powell's like not willing to cut rates. I just think he's waiting for the data to show. And that stuff kind of takes time. I think, like anything, they'll be a little bit late to the party because I'm guessing you and I can already see the inflation while it's still there and it's been sticky, just like they said. It isn't going up at the same pace it used to, and it's probably slowing a bit. I mean, even here in Vegas, I've noticed that rents have softened and some other things where they've actually come down a little bit. Well, the price of soda may not have come down. Not that we buy soda, we tend not to. But I do notice it when I go from time to time, especially because I get sticker shock because I don't go that often. But it's not necessarily that the prices are coming down, what I do notice is a lot more sales. A lot more often that they're offering, at our store, they want you to buy 4 of them, I think. But then the price is so inexpensive, it's like the cost of buying one and a half to two. So it's pretty amazing how quickly I've seen those sales come in and where I see the inflation just slowing legitimately while the data is showing that. So I think we'll be in an environment where we see treasuries, CDs, all the things that pay safe yields coming down, which will drive the prices of the stocks that pay dividends up, even if earnings are slowing down in those companies. I know that sounds weird, but I think you'll have PE ratios going through an expansion on the stocks that can pay a dividend, while you'll see a compression on the ones that weren't paying a dividend. Pretty crazy. I don't know that that'll be the case. I try to stay balanced in the meantime. I am in no rush, even though I see these things happening. But that's kind of what I envision seeing as a potential possibility going forward. Now, as always, because this is good timing, this is not financial advice. Please, you shouldn't be listening to me. I am just sharing my thoughts. I'm just a guy on YouTube. I am not a professional financial advisor. You really need to do your own research when making these decisions. I do this for entertainment purposes only, and nobody can really predict the future. Nobody can tell you what's going to happen in time. So that's why I say don't listen to me, don't listen to anybody else. Trust yourselves, do your own research, maybe reach out to a professional financial advisor. So let's get into those 3 stocks. So stock number 1, in no particular order, is Prudential, stock ticker PRU. What do I like about Prudential? I'm going to tell you the 3 main statistics that I look at first that make me really comfortable about it, and then I'll go over like what I like, as well as like I confirmed it with ChatGPT as well. Um, but the PE ratio, which is one of the ones that I look at the most because I'm old and that's kind of what we used to look at a long time ago, for Prudential is 10.4. So it's a really low PE ratio. I don't expect it to do anything crazy. Like Prudential is not a company I'm buying because I think it's just going to go way higher. In fact, when I'm buying these things, I'm not super sensitive to where the stock price goes. As long as they're in the position to pay that dividend for the next 10 or 20 years, especially if they're able to raise it a little bit each year, year in and year out, I'm totally good with it either way. If it sits where it is, if it drops a little, if it goes up a little, that's just fine because what I'm relying on is the yield that I'm buying it on the day I buy it and those payments that come in every quarter, or if they pay monthly, potentially monthly. Anyway, the yield right now for Prudential is 5.38, which is nice and healthy. My goal for the overall account is to be somewhere between a 4% yield and 6% yield. I don't want to look for, like, I might have some of those funds that pay 8 or 10%, but very little of it because, just rule of thumb, the higher something is paying, the more it needs to make and the more risk they're taking on to be able to do that. It's why I don't even look at those yield max funds paying an outrageously high percentage. I think it's really unrealistic that they're able to sustain that without the value of the underlying just dropping dramatically. Anyway, it closed on Friday at $104 and change. When I looked at the bearish sentiment as to what wasn't liked on ChatGPT, because we'll go over that first, is one, the market cyclicality, and two, the interest rates and the cycles. It's a little bit sensitive to those industries. But I like that it's insurance. It's a little bit removed from some of this other stuff that I've been into. And I think that they're going to be in an okay position. Because the other thing that I love, and one of the other metrics that I really pay attention to, is its free cash flow. They're only using 55% of it to be able to pay that dividend. Now, that gives a lot of room for error, which is why I really like Prudential. It means even if earnings slow, even if they have trouble with that cyclicality or the things that the GPT put out as things to be cautious of, I think it creates a really good situation where even if they run into some headwinds, they should be just fine to be able to continue to pay those dividends. And I think there's a possibility that things could improve and it could get better. On top of that, there's been some slight insider buying, not a ton. I don't want to overstate it, but I like to see that as well because it tells me that the people working at the company are comfortable with what's going on, which makes me feel a little bit warm and fuzzy as well. Oh, Prudential Timber, or Prudential, sorry, I say Timber Hill. It was a company my brother used to work with. Anyway, totally just like it's automatic that when I hear the first one that the others come out of my mouth, but that is not the case. Whoop, blooper. I'll put that in there. Anyway, like I always, I don't like to cut out. It is what it is. We're all human. We go where we are. So that's the first stock that I've been looking at. Number two, and full disclosure, I have a little bit of Prudential already, but it was only like a quarter of the position. I might really put on the full position that I wanted to put on because I really like what I'm looking at. And I just think that it's not one of those companies that me personally, I'm not super concerned about some major downside. And my major concern with my investments in this time is protectionary more than growth. So number two that I'm looking at, and this one will be interesting because I actually don't think I'm going to buy more of it, but I was looking at T. Rowe Price primarily because I like the dividend and I like the company. But one of the concerns that I'll get into that ChatGPT went into is a legitimate concern for me as well. So when I saw it, I have a small position in it. I'm not going to get out of the position because again, it was a quarter of what I was going to put on, and I'm okay keeping that. But I don't think I'm going to add on the rest. So we'll get into that right now. So T. Rowe Price is trading at a 10% PE ratio, which again, another metric that I love, and it's paying a 5.58 yield, which is also phenomenal, fitting right in between that 4 and 6% that I would like to. Now, understand I will have some stocks that I'm looking at that maybe they only have a 1 or 2% yield, and some that'll have an 8 or 9, but overall, I'm hoping to be somewhere in between 4 or 6 to hit my goal of where I want to be in terms of income coming in to help support my family and myself. I also think that's a good range where you're getting less growth than what the market is, but they're not paying so much that they can't accomplish that. And I'm trying to buy out of favor companies as well, in my mind, that are paying the higher yield simply because they're out of favor, not because they can't continue to grow going forward. Again, the other metric that I love, they're only using 42% of the free cash flow in order to pay that dividend. So why am I not buying T. Rowe Price? Because those are phenomenal numbers and really attractive, and actually why I bought it already. But I don't hear much about T. Rowe Price, and I kind of wondered, like, how's the company doing? Their last earnings report, the stock tumbled pretty good, and it was because the main thing that ChatGPT was looking at as a negative is they have an ongoing net outflow of cash or clients. And I think it's because not really out there marketing and growing the company. To be perfectly honest, while their numbers are great, it's not like I hear about T. Rowe Price very often. So if they have a net cash flow and a net customer base slowly siphoning off, I don't see any reason that would stop going forward. So while the numbers are great, I don't love the idea of them consistently losing business simply because they're not keeping up with the industries and that they're not doing good. Maybe they're not using AI appropriately, because part of what I was reading is that their advisors aren't making as much because as the cash flow comes out, as well as people finding these low cost ETFs to invest in, the advisors aren't making enough, causing new problems. Whereas if you look at a company like Hood, like they're taking advantage of that stuff. Now, I'm not saying go buy Hood. I'm not talking about any of that. I'm just saying that what Hood is doing is they're implementing AI to be able to be people's advisor because they know that the advisors need to get paid less and less. Now, to be fair, advisors don't get paid as much as people think because they have a split with the company. And if it's their own company, they have expenses. I have friends who do it, so I'm pretty aware of it. But I do think AI might take over in time where you're able to talk like the younger generation. I think they will be perfectly comfortable to talk to a bot who would give them advice on the things to invest in that would match their goals. I think if T. Rowe Price is just old school and stuck in their way, that is going to be a tougher thing to compete against, and they'll continue to see the outflows of customers. In the meantime, all the other metrics and all the numbers look great, so I have no issue with the position I have on already. I just don't think I'm going to add more onto it, even though when I started doing the research, that was one of the ones that I expected I would be adding on to because I like the yield and I see it as a good investment. So I guess you live and learn. We'll skip putting more into that one. And number three, which I would say last but not least, but I am going to give one little tidbit about one other if you stick around to the end that I'm not going to delve into, but just one little comment about it. But number three is Verizon. And Verizon's already had a really good move in the stock price. Fortunately, same thing. I have about a quarter of the position that I would put on. I wasn't planning on buying more at these higher prices, but when I started looking at the numbers, it's hard for me to ignore the reasons I was buying it originally. First of all, it closed on Friday at $49 a share, and it was trading below 40 not like a week or two ago before their earnings. But even with that big move, their PE is still only at 12.07, which is lower than it has been over a longer time horizon, with a yield of 5.77. I liked that it was paying over 6. I'm not trying to be oversensitive to it because it's already moved already. But the other part and that metric that I love is they're only using 50% of their free cash flow in order to be able to pay that dividend. So it's still a nice, healthy dividend, and it's only using half of their free cash flow, leaving money to be able to pay debt and whatever else they need to with the extra money. Maybe they need to continue to grow. And the biggest negatives, which were super obvious in my mind that ChatGPT put out, is fierce competition and an inability to grow a customer base because of that. Well, I think that's pretty obvious. Between them, AT&T, and T-Mobile, it is a tough business. It means it's not easy for them to just raise prices or get new subscribers because they're primarily competing with each other. And now you even have Mint Mobile and some of these other ones that seem to come around from time to time, but that happens in that industry. The thing that I like about Verizon is, like, in my mind, Verizon was the it not that long ago. Like, that was the one. I, it was probably longer than I realized, but Verizon was the most expensive, and T-Mobile was like this tiny little ant in the, like, they were number three, but they were there. Well, that seemed to reverse, and I'm guessing over time, there's no reason that that can't, like, change in any direction. So as long as Verizon keeps their eye on the ball and just sticks with things and continues to pay those dividends, I do think if you see CD rates and the other stuff come down, if it's a secure place to get a nice dividend payment, maybe it drops to only 4% or high threes simply because it's a secure place that's able to pay the dividend, so people are comfortable putting their money there and receiving that income distributions the same way they think of as a CD. Now, if they're taking on too much debt or they start making newer decisions that cause an issue that put the dividend in jeopardy, that's about the only thing I see as a headwind or a potential to really hurt the company. I do think that you could have some short term volatility in the price simply because of how much it went up so recently. But I watched other companies like Altria and some of the others that were having a high dividend, and they seem to be doing the same thing, which makes me feel like Verizon could have some follow through. Again, I think it's overstretched right now to the upside, so it could have a pullback, but sometimes they just don't. That's why it's not really financial advice. It's just discussing what I'm looking about, what I see, what I like about the dividend, and where I see some attractiveness. Now, the one other that I wanted to make one little tidbit about, I was looking at a couple of REITs, and I'm considering those as well. The two that I'm looking at are Vici, VICI Properties, the one here based in Las Vegas, and SL Green, the one that's primarily the New York real estate. When I looked at Vici Properties, what I liked and I didn't like is their rent increases are based off of CPI. So what I don't like about that is if we're slowing down and the CPI numbers start coming in lower and lower, that means their rent increases that they have with the agreements with the casinos aren't going to be as much as investors might have been hoping for. I think that people may not realize that when they're looking at the company because every other metric I really liked. It pays a good dividend. They're not taking on a lot of risk to do it. Their agreements are like they're pretty much 100% occupied. and their agreements are with companies that even during COVID, still made their payments. I think the stock price is down because all the news about, Las Vegas is dead and nobody's visiting there and everything else, like it's so overdone. First of all, it's cyclical. Travel is cyclical. It happens. But Vegas is plenty busy. If you go down to the strip and you want to get into a restaurant, depending on where you're going, it isn't so easy to get in. It may be down over the past couple years, but man, they were beyond high for a while. I do think that the prices of some of the places have gotten exorbitant, but they'll balance that out. And the reality is, the whole point of it is, Vici's payments have nothing to do with that. The casinos make their rent payments no matter how busy or slow they are. And the fact that they were able to make their payments throughout COVID tells you that even if things slow down, it's not like the MGM or the others are not going to be paying their rent because they like where they are. Now, like I said, if CPI slows and the rent increases that are put into the contracts are based off of CPI, that does mean the growth is probably limited if the economy slows, which is kind of what I think. Anyway, I hope you liked the video. Thank you for stopping by. I hope you like the new channel. Valentine's Day, so we're going to go to lunch and do some stuff. We were supposed to go snowboarding today, but my son wasn't feeling great yesterday, so I figured day of rest, relax, which is why I was able to do the video. Typically, I'm up on the mountain. It's not realistic. But do me a favor on Tuesday, if you can be on my other channel at 11 o'clock. I get it. I know the time sucks. I'll put that little, I think it's called a GIF right there about how selfish I am, because I know that time sucks for a lot of people. But I really like the live platform. I like that people can ask questions. I can read them and be able to respond. If you have questions about specific companies, I'm happy to take a look. So come with them if you do. I don't expect a ton of people, but that's also kind of what I like. And that's actually what I like about the new channel. I really appreciate you guys making comments and telling me your thoughts. I like that you've been giving me a couple of stocks to look at as well, because I think it's interactive. Like, I can learn from you guys as much as maybe you're learning from me. So I think that's great. And I want to thank the people who've been making the comments. And the comments have been a lot more personal, which I think is awesome. So anyway, thank you. If you haven't already and you managed to find this video, please do me a favor, hit that like and subscribe. If you don't, it's no big deal either. I do this to vent my thoughts, and I'm super, I know it's going to sound silly because I think I have 50 subscribers, but I'm really excited about how that is, and I'm glad to see people finding it, and I'm super excited that there's been some interaction in the videos as well. So have a great weekend. I will try to post consistently and often. I just don't know my schedule, and it is what it is, and it's not like I do this nonstop every day. I flip the thing on and record. Anyway, have a great Valentine's Day. Lily, if you're watching this long, I love you dearly. Thank you for the years that we've spent together and the years that we will going forward. Have a great weekend, everybody else, and I'll talk to you when I have time to do the next video. Bye-bye now.